Hi, Ryan Walker, mining analyst at Echelon Capital Markets, back with another installment of our mining Q&A series. Today, we're joined by David Wiens, CFO of Bunker Hill Mining, which is focused on restarting the past-producing Bunker Hill silver lead zinc mine in Idaho's prolific Silver Valley. David, thanks for making some time for us today. We really appreciate it.
My pleasure, Ryan.
Okay, so let's just jump right in. For investors that might not be familiar with the story, can you kind of just give us a quick overview of Bunker Hill and the opportunity at the mine for you guys?
Absolutely. So as the name may suggest, our flagship asset is the Bunker Hill Mine, Northwest Idaho, Silver Valley, which is the most prolific silver producing region in the world, produced over 1.2 billion ounces of silver. And the Bunker Hill Mine produced the third largest amount of that silver in the Silver Valley when it produced between 1885 and about 1981. So a lot of people may associate the Bunker Hill Mine with the environmental disaster that it was, quite frankly, in the late 1970s, early 1980s. The Environmental Protection Agency cleaned that up over a 35-year period between 1981 and 2016. The mine's been on care and maintenance since 2016, over the last 5 years. And the current management team, including myself, came in about a year and a half ago, really with the purpose of looking at restarting this mine in a much more sustainable manner than had previously been done. The Bunker Hill Mine is an absolutely prolific mine, the most prolific by tonnage, certainly. Again, we talked about the silver, historically speaking. So it's a pretty exciting opportunity with both the asset and the team that we've brought to execute this.
Okay, great. So, you mentioned the environmental history of the asset. Of course, there also have been previous unsuccessful restart efforts at the mine. What's different in your mind this time around?
Yeah, and it's interesting, Ryan, because in my mind, there haven't really been any previous restart attempts, or not really any serious ones. I mean, as you can imagine, up until 2016, the environmental mess was still being cleaned up. There were a couple of previous management teams that came through, and look, I don't know them personally, and I know that they sort of made some attempts to sort of promote the story and get some money in and perhaps do some drilling. But there wasn't a 43-101 resource published, there wasn't an economic study published, and there really wasn't, from what I can see, any sort of chance of that actually happening. So, that's the difference. I mean, it's sort of, it seems like an old story here. All this mine's been around, but this management team and what we're doing here has been really the first attempt, and that opportunity has only been around for the last few years because the cleanup was happening until 2016. That's so. What I would say is this is the first serious attempt, and it's going to be much more than an attempt by virtue of what we're executing here over the near term.
Okay, great. So, and you mentioned management. That's kind of what really caught my eye when I was introduced to the story. It's a complete 180 from previous groups that may have been there. And it just represents a clean break from that and a fresh start. So, can you kind of give us a brief overview of the team and their experience? You mentioned that the site was a Superfund site, and I think your team has some experience in that regard, which is hugely beneficial.
Yep. Absolutely, and it's what caught my eye when I looked at joining the company as CFO just over a year ago. So the team is comprised of ex-Barrick executives, so headed by our chairman Richard Williams. So he was Barrick's chief operating officer between 2014 and 2018, and he really demonstrated during that time period that he was a leader in a turnaround situation. So Barrick's operating margin doubled over a 3-year period in a declining gold price environment after he joined in 2014. He executed changes and improved that operating margin quite successfully. Sam Ash, Richard brought with him, who was also at Barrick. He was running Barrick's largest scale Lumwana mine, the copper mine in Zambia. Sam was general manager there. He's an American engineer. It's funny, actually, his father used to work at the Bunker Hill Mine in the 1970s. So certainly a pretty unique link to the past. He lives in Idaho. He walks 5 minutes to the mine every day. And that's a very important aspect of being locally based and part of the community. But going back to what he achieved at Barrick, Lumwana, as I understand, was losing almost $1 million a day in cash flow when he joined. And by the end, they turned that around through a series of complex restructuring and discussions with offtake players and others. They turned that into a positive free cash flow operation. So this is an exemplary operational turnaround team led by Richard, including Sam. And last but not least, before I talk about myself, I'll talk very briefly about myself. Brad Barnett, who also came from Barrick. So he was head of Barrick's closure and rehabilitation portfolio. So the global portfolio, which included several Superfund sites. And he managed to rationalize that, look for opportunities where others would see costs. And so he is perfectly suited for the turnaround here at Bunker Hill. And we've demonstrated that. It's funny because, up until a few, and we still sort of are a new management team, but, we've been on board for about 18 months. And so at a certain stage, you say, well, what's your track record of Bunker Hill, right? Let me just forget talking about what you've done before. And I think on that front, we've hit all of our targets here of what we've been looking to do over the last 18 months. I mean, obviously we haven't restarted the mine yet, but there's a few things that needed to be sorted out before then, such as, financing, settling with the EPA, buying the mine, publishing studies, both in terms of 43-101 resources and as well as PEAs. And we've done quite a bit over the last 18 months. So, we think of our track record at this stage, sitting here and talking in January of 2022, as really obviously our past lives, but also what we've done here at Bunker Hill over the last 18-24 months. In terms of myself, finance guy, I was a banker I've been covering mining for about 15 years, most of that on the corporate side. So I was fortunate to be part of a team at SSR Mining, originally Silver Standard, as you may recall, that helped really grow that company from a single asset with only a couple of years of mine life left in 2013 when I joined, to a portfolio of free cash flow positive long life assets. We met production and cost guidance 7 years in a row along the way. And obviously that set the stage for the merger, the $5 billion merger with Alistair. So looking to bring some of that success. I was an investment here to Bunker Hill. I was an investment banker before that. So I'd like to think I've achieved, a thing or two here together with the team, including the $50 million financing that we've got in place. So I'm pretty excited to be part of this team and moving this asset forward.
Well, it's great. I mean, the team seems especially suited to the project. And, I as well have been around for about 15, 20 years in this business, and every corporate presentation I've ever seen says world-class management team. I think you guys can actually make that claim reasonably.
Well, I appreciate that. I mean, look, it's a word that gets thrown around a lot, but I think the guys that I'm working with here, they're world-class, these guys. I mean, what they achieved at Barrick, what they achieved before Barrick, and what we've achieved together as a team here, I don't think anybody reasonably, and we've had a lot of skepticism, and it's been well deserved up until achieving these, that we could really turn this thing around. I mean, are you kidding me? Like Superfund site, you're a market cap of $40 million. How are you going to raise, you're going to raise more financing than your market cap? Like, this thing is a broken story. Well, it's not. It's actually a prolific asset that people, and you can see it in the numbers, which are getting better and better, and demonstrated that. You can see just sort of what sort of potential here. So, when this thing goes, and you're starting to see some momentum here, but it's really about to take off, we think.
Okay. And speaking of takeoff, so really key to get the whole thing rolling here, you mentioned the EPA a couple of times, was getting a deal with the EPA. They've been treating the water from the former mine for quite some time, and so you've recently announced an agreement with them. You're going to give us the background on that, and then maybe walk us through the new agreement.
Absolutely. So, and there's a lot of misconception about the EPA and the nature of the liabilities of Bunker Hill. So I'm glad you asked the question. So, the EPA probably spent $200 million cleaning up the Bunker Hill site. There was a smelter on site, a zinc plant. There wasn't a single living tree growing in the Silver Valley in the early, when this thing shut down in approximately 1981. So the first question people may ask is like, how much are you on the hook for that? And the answer to that is none of it. And the reason for that is there was an agreement reached in 2017, 2018. As you can imagine, nobody would come back into this from a company. It was an incredibly tragic situation, right? I mean, but unfortunately, the past is sort of the past, and it happened. but nobody would come back into this situation if they were on the hook for those costs. So the company, under previous management, agreed a deal with the EPA whereby Superfund circular liabilities, the company is not responsible for any of that. However, what the company is responsible for, and we'll come to this in a second, is the cost that the EPA incurred to treat the water coming out of the Bunker Hill mine from approximately 1994 onwards. And that came to $20 million. So the company formally agreed that apart from this $20 million, there was no further liability. 1 million of the 20 was paid, leaving 19. And there was a payment schedule that was about $2 to $3 million a year. Long story short, the company couldn't make the payments. And so when the current management team, including myself, came in, we inherited this sort of situation where we were in arrears with the EPA on the agreed payment schedule. And so, as you can imagine, that relationship was quite damaged when we came in. And we were in a tough situation where, as a junior mining company, being, and as of now, we're completely in compliance, which I'll come to in a second, but we would be $11 million in arrears right now with the EPA on that $19 million. And so, as you can imagine, trying to do the restart efforts, buying the mine, covering working capital, doing restart, covering EPA, that's a very difficult situation to go to investors with to try to raise that money into that situation, right? So long story short, what was needed to effectively remedy that and get us to a situation where we are today is a revised deal with the EPA. And so part of what we had to do during those discussions with the EPA over the last 12, 18 months is demonstrate to them that we were different from the previous management team, that we actually, this was not some sort of, plan to defer the obligations and then just default again. So they wanted to have confidence, and rightly so, that we would be able to, if they agreed to change the payment schedule, that we would be able to meet those obligations out of the free cash flow from the mine once it was in production, that we had the actual ability to get it into production, that we had the financing lined up, that we were actually able, from an operational perspective, to execute this. And so that took a long time to gain that trust and convince them that this revised deal was in both parties' best interests. So that's exactly what we did. And the reason, and that comes to the announcement, and we announced that on December 20th. And the reason that was announced concurrent with the financing and the purchase of the mine is they all tie together, because part of that discussion was the EPA was, well, do you actually have the ability to finance this? Do you actually have the ability? We will potentially, and it took a lot of sign off internally, rightfully so. We faced a lot of skepticism to begin with. There was a lot of discussion. Well, you have to demonstrate that you can do this at the same time. So we announced it all together.
Yeah, well, I mean, I think it's a testament to management. I know, kind of introduced to the story late last year, and I know you had mentioned we're going to get 3, 4, 5 of these things tied up before Christmas, and I'll admit I was pretty skeptical myself.
Yeah,
and
you're not the only one.
Yeah, pretty impressive. So congratulations on that. So
appreciate it. Yeah,
you got that EPA thing, the ball's rolling. You got the financing package. And you're talking about, free cash flow within, conceivably 18 months, 24 months. What does that, so that's based on the PEA you did late last year. You're talking about around 25 million US free cash flow based on some pretty conservative metal price assumptions as well. But what does that look like now with this financing package baked in, the EPA agreement baked in? I mean, is that all offset by metal price appreciation between the, then and now?
Yeah, great questions. So let's start with using the metal price assumptions that are in the PEA. So as you mentioned, the average over the 11-year mine life in that latest PEA is about $25 million of free cash flow at the mine level. So we now have a 1.85% royalty. So the average payments on that, call it about, which is not hard to you've got $80 million of revenue roughly a year, and this is all in the published PEA. Take 1.85% of that. It's about $1.5 million a year of payments on the royalty. The stream it's a 10% stream on all metals of zinc, lead, and silver. And that is over until a certain minimum quantity is met. And we're getting $37 million at our election between 27 and 37. But let's just assume, for argument's purposes, we draw the full 37 to get a 10% stream for approximately 10 years. The price on the stream in terms of the metals is about 20% of the spot price. So if you do the math on the remaining 80%, which is effectively the cost of the stream, payments on that are probably about $6.5 million a year. So add on some G&A, factor in a tax shield, you're probably looking at 17, to $19 million a year instead of the 25 after deduction of all of those payments. In addition, we have the ability to buy back part of the stream. So that increases the economics even more, above that $20 million a year, I would say. So we have an ability to buy 50% back of the stream up until early 2025. That is certainly our intention. And one of the great characteristics of that is that it basically means that half of the stream amount is bridge finance to get us through there. So now, if we plug in metal prices anywhere close to the spot level, I mean, the zinc price in particular is 50 cents above what we used in the PEA. In the PEA, we used $1.15 per pound, and it's currently at $1.65. So that's sort of $19 million, 17, 19, 20. And as you can, I should caution that all these numbers are very high level. There's tax implications. There's all kinds of stuff that has to be factored into that, which has not been optimized yet. So these are very high level. I'm just saying the 25 that we quote at the mine level after all of this is probably in the 17 to 20 range after the deduction of all things before the buyback. If we include spot metal prices, you're looking at upwards of $35 to $40 million a year. So pretty compelling. Those are all US dollars. You look at our market cap today, it's about 40 million bucks.
Exactly.
It's about $40 million. So, it's pretty exciting. The EPA payments are not included. That's about sort of a couple $1 million a year just for those 5 years. So that's, we certainly see that the remaining 17, because we've actually paid 2 million of the 19 already out of the proceeds from the royalty convertible debenture that came in. So that you could deduct another couple million a year just for those 5 years.
No, that's great. And that cash flow, that free cash flow is not 5, 10, 15 years away because of permitting. I guess that's the other thing to ask about is the permitting. You're on patented land, private land, so that helped you out there. But maybe if you could just kind of give us a quick thumbnail sketch on the permitting path.
Oh, absolutely. And so it's actually the polar opposite of, when people are still, and we just talked about some of this with the EPA, right? I mean, when people first approach this story, they say, man, this must be a permitting nightmare. You've got the EPA involved, this thing was an environmental disaster. Well, actually, when you dig under the surface, it's the complete opposite, because because of our partnership with the EPA here that we achieved through that agreement, we're fully in compliance with them. We're not responsible for any of the previous Superfund site. And then in addition, what people, and this was a new situation for me, to be honest, because in my previous life, I've never seen a situation like this, where we are, not only are we in, and the Fraser Institute published from a policy perception perspective, that Idaho is the #1 sort of mining jurisdiction in the world, really. So let's leave that aside as well. Let's talk about the fact that under the 1873, under an 1873 mining law from the US, if you're on private ground with patented mining claims, you're in a totally different permitting world or lack thereof. So we do not need an operating permit. There's no NEPA process. There's no BLM involvement, no Forest Service involvement. This is private ground, patented mining claims, and we have the ability to effectively get into production without any traditional operating permit. Now, do we have zero permitting? No, we don't have zero. So there's a couple of things. There's a water discharge permit. We've already done baseline sampling. There's 30 years of operational history with really good records on that. That is not a constraint to actually getting in production, but it is a permit that we'll need. And the permit effectively just allows us to do what we're doing already, which is discharging water from the Bunker Hill mine. So we're in the process of that. We would expect to get that permit probably sometime next year. look, there's an air quality discharge permit. There are construction permits if we need to refurb buildings or put up, storage units and things like that, that we'll need from the county. But some of these you could get turned around in a couple of weeks. So long story short, we do not see permitting to be a constraint or a bottleneck to move this project forward into production, which is why we keep using this term rapid restart. Yeah,
that NEPA, not having to go through the NEPA process, that's got to save you at least a couple of years. From what
it saves us a couple of years, and all of the things that come with it. I mean, a lot of NEPA processes, they seem from the outside to include lawsuits that people inevitably file or interest groups and things like that. And it's not applicable in our case. There's no NEPA process. We just go straight in.
Great. Okay, so then you've got the permitting, and then as far as infrastructure, it's a former producer, so presumably there's pretty good infrastructure left behind you may be able to take advantage of, and local surrounding infrastructure in a mining community or region.
Absolutely. And so, we've got pictures, of this in our deck, etc. But, if you take a look, so the Bunker Hill Mine is part of the town of Kellogg. It's part of the community. It's a driveway out of a residential area. And by the way, there will not be disturbance to that residential area once we're in production. It's an underground mine. We're making sure that trucks are going to go around things and things like that. So certainly don't have that perception. But the point is, it's right in the middle of infrastructure. It's got grid power at an affordable cost from Avista. It is 15-minute walk to the major interstate highway going from Idaho, Washington, Montana, etc. It includes a lot of surface buildings that are still operational. It's got a building right next to the administration building that could house the process plant, and we'll come to that in a second, and right by the mine tunnel entrance. And it's got operating rail going in. There's hundreds of miles of tunnels, which I know sounds like a lot, but it's actually a true stat. There are hundreds of miles of tunnels that we have access to. We could drive rubber tired equipment into stoping areas now. This is a brownfields restart where there is a massive amount of infrastructure in place still. Is there some rehabilitation that needs to be done in some development? Yes, there is. I'm not going to say that the entire mine is in impeccable condition. But it is a totally different situation than a greenfield project. And there's surface buildings, there's underground infrastructure that still works, and some of it needs some rehabilitation, but we factored all that in.
Great. Okay. So, yeah, permitting, you never want to say a slam dunk, but a clear path to permitting. You've got the infrastructure head start. What's kind of the path forward for the next several months? Development can kind of be a boring period. Is there exploration potential that maybe you can kind of fill that news gap so that that there is some excitement to the story while you do kind of the boring development work?
Yeah, no, there absolutely is, Ryan. So I think let's touch on exploration sort of last, because that actually leads into another project that we've got that's easy to forget that we're entering into outside of the Bunker Hill Mine in Colorado. Where we see a lot of exploration potential. But coming back to the news flow, you're going to see a lot of news flow over the next few months as it relates to. So a lot of things like awarding of EPCM contract, appointment of a general manager, met test studies, geotech studies, plant engineering. I think a big one that we're quite excited about announcing, can't say too much, but this is at this very point in time, but it is a process plant solution. So we've been telegraphing this to the market for a while here, and I'd love to tell you the details here, but we are in the process of securing a process plant that is exactly fit for purpose at Bunker Hill, which is the one area that the mine doesn't have right now. There's no process plant. And so this is going to put to bed, I think, people's concerns, if you can even call them that, on a number of fronts. It ties into the whole inflation thing. There's an inflation. Right. So, think about the long lead times and supply chain things going on right now. Do you have to order a plant 2 years ahead of time? When is it going to arrive? You know, is there going to be a massive CapEx blowout on this and that? And so what we're doing is working on securing a process plant solution that is in relatively close proximity, that's fit for purpose, that has records, and that actually could result in even a CapEx savings. Forget about a CapEx blowout. So,
Yeah, well,
you know,
that would help
yeah,
you stand out for sure of late.
exactly. So I think that to your question about news flow, in addition to all the stuff you'd expect on development as we move towards that, and what we think is a formal construction decision in probably the second quarter, together with a pre-feasibility study, you will see things around securing the process plant, awarding, you know, contracts and things like that. Another one is we're finally looking to upgrade to the TSX venture. So this is something that has been in the works for a while, and has, you know, I'll be completely honest, a little bit of frustration for us as a management team. So, you know, the part of the, and we understand why there are, you know, certainly requirements which absolutely should be. And so one of those, just to be more clear what I'm talking about here, one of the concerns that the TSX venture has had, and it's rightfully placed, is the working capital balance on the balance sheet. So this is just taking current assets minus current liabilities. And so as you can imagine, being $11 million in arrears with the EPA, which we no longer are, but have been up until now, that puts the working capital balance into negative territory. And so, you know, that doesn't quite fit the box of, you know, the TSXV, and for good reason. And so with that resolved, you know, we are in the process of further discussions with them. These things always take time, but we do see a path forward, you know, to potentially being listed on the TSX venture sooner or later, which is something that, you know, is for me at least as well. We've accomplished pretty much everything else that we've said we were going to do, and that to me is kind of like the last. I mean, and then we've got all the development stuff, and you know, we'll continue that. But to me, that's sort of the last tick box that I'd like to get here in the near term. And I think a lot of investors would like to see that, and rightfully so as well, because it opens up, you know, pathway for more liquidity, investment from bigger funds, and it opens up moving, you know, a pathway over the longer term towards moving to a senior exchange as this company grows.
Great. Wow.
And I'll come back to exploration because I said I would. We have a earn-in option for a gold project in Colorado, past producing district, only produced until the early 1900s, and then shut down around World War II. But, you know, some pretty exciting type of grades that they were mining there historically, 23 grams a ton gold, and pretty prospective district. We're looking at plans there potentially for this year to convert what would be a historical reserve to 43-101 standards. We may look at some initial drilling there that could, you know, have some very low hanging fruit at a low cost to have some pretty nice hits there. So there's certainly some exploration upside there, and there's lots of exploration upside at Bunker Hill, massive amount. We just published our geophysics survey, and we found some large scale shallow anomalies. I mean, which really proved, I mean, Bunker Hill is a massive land package, and you know, this shows that the mineralization extends potentially well beyond the historical footprint of the 900-acre mine. So, yeah.
Great. Well, what a very exciting story. You know, congratulations on all the success so far. We look forward to following and seeing more success. Look, I don't know how many stories are as compelling when you can conceivably cash flow the market cap of the company in the relative near term. That's a pretty compelling investment opportunity there. So we'd encourage investors to take a deeper look at the story. And again, we appreciate you taking the time today, and we'll look to follow up with you maybe in a couple months down the road, do another interview and see where we sit then.
That'd be fantastic, Ryan. I really appreciate you taking the time to give me an opportunity to present on behalf of the company, and we're pretty excited about what we're doing, and we're going to just keep executing. I mean, that's what we do. That's what gets us up every morning, and we're going to just keep going.
Great. Well, thank you very much. Appreciate it. Take
Thanks
care.
very much.